Hello and welcome. So I'm going to do just a quick tutorial on posting entries, accounting entries to what is called a working trial balance. So this is similar to what we're going to talk about in the lectures this week in terms of general ledger accounting. Remember, so far we've talked about how things get posted, and we said debits and credits just mean left and right, and a debit is a plus to an asset, and a minus to a liability, and so forth. So we're actually going to just do some simple entries. So first of all, we've got a grid here, which I've set up, which shows some accounts on the left-hand side, some asset accounts, cash, accounts receivable, and equipment on the left-hand side at the top. That's all my assets. My liabilities are accounts payable and notes payable, and my equity accounts are common stock and retained earnings. And then I have a total for liabilities and equity. And then my income statement down at the bottom there, I have revenue and wages. So pretty simple stuff. One revenue item, one expense item, and net income. And this is an Excel spreadsheet, so I've already set up some formulas to add things up and subtract them. I'm going to ask you to do something like this for an assignment, but you'll have to set up your own spreadsheet. I'm not going to do that work for you. So we're going to take the information that we have about Castine Lawn Service, and we're going to post that information, and hopefully we're going to end up with a balance sheet as of yeah, I think I can do that. Let's just do that. Now we can see the names. I'm going to end up with a balance sheet and an income statement as of December 31st, 2014. And the balance sheet accounts from the prior year carry over to the beginning of this year. So the balances on December 31st, 13 become the balances on January 1st, 14. So the cash that we had on December 31st, 13, we're going to add in here for December 31st, 14. So you see that $900, $900. Accounts receivable, we had $1,200. And equipment, we had $5,000. You'll notice the right-hand side is filling up, but it's just duplicating the numbers because that's the only number entered. And we have total assets as of December 31st, or of January 1st, 14 of $7,100. We also have accounts payable, notes payable, common stock, and retained earnings. And notice that the beginning balances for assets and liabilities are equal. This is key. Whenever you're doing this work yourself, manually especially, but whatever, you want to make sure that you start with a beginning balance, because if your balance doesn't balance at the beginning, it certainly won't balance when you're done. So make sure that it equals. So here we see that assets and liabilities are equal. And then we have some transactions listed here for 2014. So during 2014, we borrowed $3,000 from Bar Harbor Bank. Trying to get my picture out of the way here, see if I can do that. So we borrowed $3,000 from Bar Harbor Bank. So we need to post that transaction. So what did we get from Bar Harbor Bank? Well, we got cash. So we have to increase cash by $3,000. So to increase cash $3,000, I'm going to debit cash $3,000. That's what we got, right? You notice the right-hand column here changes. The formula that I've entered for the right-hand column is the first column plus all of the debits here minus all of the credits equals the end. So I posted a formula there that's going to add debits and subtract credits for cash, which is the correct thing to do. So what's the other side of the entry for this cash entry? We got cash from Bar Harbor Bank. what else has to change? Remember, it's double entry accounting. We have to affect another account so that our equation stays in balance. Well, we now owe more money to the bank. We originally owed $2,000 to the bank. We borrowed another $3,000, so we have to credit notes payable, which is going to increase my borrowing to $5,000. And if you'll notice here, I'm subtracting the debits and adding the credits because I'm on the liability side of the equation. Liabilities, a minus is a debit is a minus and a credit is a plus. So I've now posted entry 1. Entry 2, we go out and buy a new lawn tractor for my lawn service company. And we're going to spend cash for that lawn tractor. So we're going to credit cash. We take $2,500 out of cash, probably why we borrowed the money, right? We needed to buy a new tractor. And we're going to debit equipment. We had $5,000 of equipment. We're now buying $2,500 in new equipment. The third thing we do is we pay wages. We paid wages of $5,000. And what is the other side of that? So we paid out cash of $5,000. What's the other side of that? Well, wages are an expense. So if we go down here, we're going to find a wage account, and we're going to debit an expense, which is a plus to an expense. So we have a $5,000 wage expense. We gave up cash, and we got services. We bought the services of our employees. We earned revenue of $9,000 paid in cash. So we got cash of $9,000 by selling lawn services. Okay, what's the other side of that? So we're going to increase cash $9,000. Revenue. We earned revenue. So we're going to credit revenue, which increases revenue, because a credit to revenue is a plus to revenue. All right, so we've got revenue now. Then we earned service revenue of $4,000 on account. This is jargon, accounting jargon, but when he earns something on account, that means I'm earning the money, but I haven't been paid yet. I've sold something, lawn services in this case, but I've told my customers they can pay me later. So I'm going to mow their lawns, fix their gardens, whatever the heck it is I'm doing, and I'm going to bill them after I've done the work, and they're going to pay me sometime later, maybe 30 days later. So I've done $4,000 of work that I haven't been paid for. Didn't do it for cash. They didn't pay me while I did it. But when I did it, they said, pay me later. So I'm going to increase my accounts receivable because a debit to accounts receivable is an increase. And I'm going to record more revenue. And you'll notice here, revenue, I'm going to subtract debits to revenue and add credits to revenue. So I now have $13,000 in revenue. I received $2,000 on account. So what did I get? I got $2,000 from people that owed me money. Received on account translates to accounts receivable. I received money on account from people who owed me money. So I got cash. And what did I give up? I gave up money that was receivables. They don't owe me the money anymore. So I got cash, and I have to take those accounts out of receivables. I can't bill them again for that. They've already paid me. So they don't owe me money anymore. So I'm going to credit receivables, which reduces receivables. And then finally, I paid $1,000 on account. Paid on account equals accounts payable. I paid money to people that I owed money to, suppliers that I'd bought things from and hadn't paid yet. So I paid money on account, credit to cash, and a debit to accounts payable. Since I have the formulas all in here, I've done something that you may not have noticed. I earned during the year $13,000. I had in revenue, I had $5,000 in expenses. So my net income after expenses was $8,000, which I have automatically put as a plus to retained earnings. Credit to retained earnings is a plus. So my retained earnings increased by $8,000. I had $1,700 to begin with in the year. I made $8,000 in 14. So my new retained earning number is 9,700. So what do I have? I have total assets, total liabilities and equity, and net income. Guess what? I've just created a balance sheet and an income statement for Castine Lawn Services for 2014. Started with the balance sheet numbers that I had to begin with. I had some cash, I had some equipment, and so forth. Owed some money to some suppliers, owed some money to the bank. Recorded all my transactions for the year, everything that happened for the year, and ended up with a balance sheet at the end of the year. So the balance sheet reflects what I have as of December 31st, 14. I have $6,400 in cash. I have $3,200 owed to me by my customers. And I now have $7,500 in equipment. Total assets, 17. I owe my suppliers $400. I owe the bank $5,000. I have common stock of $2,000. And I have retained earnings of 9,700. So I have 5,400 in liabilities, 17,100 in assets, and $11,700 in stockholders' equity. For the year ended, for the whole year ended 2014, I generated $13,000 in revenue, had $5,000 in expenses, and had net income of $8,000. So that's a simple working trial balance. You have an assignment this week to do something like this. I'm going to give you a document with the information that you have here on the right-hand side of this document. So you have this information here. You'll have that information. And I'm actually going to provide you with the grid, but I'm not going to give you a document that has all the formulas in it. You're going to have to do that yourself. So I want you to post the entries, include the formulas that are necessary, so add the debits and subtract the credits to the assets and so forth, and come up with a new balance sheet and a new income statement for the year end. I'll post that assignment, and please do it, and it's due, I think it counts for 25 points, I believe, and I expect you to turn that in at the end of the week. So thank you very much, and good luck with that. Thanks.